Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about a company that can actually profit from colder weather. We're talking about Compass Minerals International. So let's go ahead and begin into the daily stock analysis. Thank you for joining me. If this is your first time to join, hit that subscribe button, hit that like button, whichever platform that you're listening on, whether you're listening on YouTube, Facebook, Twitter, which I understand Twitter Periscope's going away in March, so we won't be doing that anymore. But if you're a Twitterite, person that likes Twitter, come on over to YouTube. I think that you'll find that the platform there is more robust. I feel like that I have some of the smartest followers in the whole wide world because you all give me some inspiration. You give me a lot of inspiration. You give me good ideas on stocks that I should help you with. And the stock that I picked today to go through wasn't really a request per se, but I had one follower that said, I like to find stocks that pay good dividends. So that's why we're talking about this stock today, why we're talking about Compass Minerals International. The second reason that I want to hit upon this is because it's January, and January traditionally is a good month for small cap stocks. Small cap stocks generally are going to be those that are about $5 billion and less. That's up for debate from that standpoint. But traditionally is an anomaly. An anomaly is something that happens in investments without really any real explanation. There's a lot of different reasons people think that that could be happening. So without going into a lot of detail about that, let's go ahead and keep going forward. And I want to remind you that today's presentation is brought to you by our sponsor, which is Richards Financial Planning. If you are frustrated with your finances and you're not sure what to do, go over to richardsfinancialplanning.com and learn about the prosperous planning process. It's something that I think that you'll be well rewarded for. All right, I'm going to make the screen just a little bit larger for those of you who are watching. If you're just listening, what I'm going to do is I'm going to go through just a little bit of background on Compass Minerals, and then we're going to get into more of the details on what makes this company tick, on what makes it profitable, on what are some of the things that you should look out for. So let's talk about it just a little bit today, and if I can hit the right button here. The company in itself really has just two main revenues, salt and fertilizer products. Their revenues are affected by weather, climate change, currency fluctuations, but I really think that they're a wide moat company. We'll talk about why that is in just a few moments. And when we talk about a moat is going to be that invisible barrier that's between the company that we're discussing and their competition. And for a company that's worth $2.17 billion, that's not a big company, but they do have a moat. They also have a pretty good dividend, but I want to talk about some precautionary thoughts on that dividend here in just a little bit. But let's go ahead and dig into this. I think it's important in any company that you're considering investing in that you know a little bit more about what they do and how their business is divided. And I use a process that I've developed over the years, and I call it SEC, and it stands for Stability, Earnings, and Competitiveness. And that's what we're going to do today. We're going to talk about those three characteristics and get into a little bit more of the detail. Now, a moment ago, when I was talking about the moat, remember that imaginary barrier that's between the company and their competition? I really think that Compass Minerals has a wide moat, and this is the reason why. There's really 5 different aspects to a moat, but in this particular circumstance, their moat is their proprietary assets and their cost advantage. Let's talk about that just a little bit more. Their geographic advantage is this. They're located, one of their main mines is in Goodrich, Canada, Ontario, Canada. And if you're watching, you can see a map that I've thrown up here, and it shows where Goodrich, Canada is, and it's right there on Lake Ontario. Now, I'm going to show you the next slide, and I think that what you're going to see is kind of interesting. And let me describe to you what you're looking at. A moment ago, you were looking at a map that was from good, let's say it's actually from Bing, Microsoft Bing, and it's pulled way back, and you could see Lake Huron and you could see Ontario. But now we've zoomed into it and we're actually looking at kind of an islandlet, let's say. And actually, what this is the mining facility, the Goodrich Salt Mine in Ontario, Canada. And what this company is able to do is they are able to mine salt that is actually about, I believe it's 1,200 to 1,800 feet underneath the lake. It's an amazing process. It's been around for quite a long time. The advantages in itself is also with this company is they have something that really can't be duplicated. A lot of times when we talk about a proprietary asset, it might be something like a patent if you've got a tech company and they have a certain process or something like that. But in this particular instance, you don't need a patent. God gave it to you. The idea is that the mine itself can't be duplicated. They have mine deposits that are 100-foot thick inside of this salt mine. The average salt mine has, let's say it has deposits that are averaging about 20 to 30 feet thick. Now, the other thing is that if you remember back looking at the map just a few moments ago, when it zoomed into the facility itself, it has a deep water port right next to it. Now, what do they use all this salt for? We'll talk about that in just a moment. This company also has other operations, one in Louisiana, which is right on the Mississippi River, and that actually is able to help disperse the salt sales to Midwestern states. Now, if you think about where Goodrich, Ontario is, right there on Lake Huron, they're able to ship salt that they mine all over the northern regions to areas that are colder. Now, why is that important? That's because one of the biggest things that they use this for is going to be de-icing. We'll talk about that in just a moment. But the things that we talked about, the location and the shipping in itself, it adds some cost advantages too. And that's one of the other moat characteristics. Remember, friends, a moat, it's kind of like the superpower of a company. It's the superpower that they have that helps them stand out and make profits. Their cost advantages are really significant. And I'm not really trying to sell you on this company. I'm trying to basically give you the education on what they do so you can determine whether this would be a stock that you think would fit into your portfolio. And the cost advantage is added to from the fact that water shipping is actually much more cost effective than rail or trucking. Now, they also have certain processes of creating the sulfate of potash, which is used for plant nutrition. And that particular process is a brining process. So it's just like if you were brining the turkey for Thanksgiving. Remember, it's got water that's involved in it. And they use a natural brining process to create that sulfate of potash, which is an advantage. There's a chemical process which some other countries use, other mines in other countries, particularly in China and in Chile, but the process that they use for Compass Minerals is a natural process. Now, when we look at how the company divides its business parts up, I've put up on the screen here a pie graph. Now, if you're just listening, let me describe this to you. You've got a pie graph with two significant portions. One's got 36% and the other's got 36% on the other side. And that represents two of the main aspects of this company's business. One is going to be highway de-icing salt. If you've ever lived in a cold region, which I have, they really use the salt when it gets icy outside, and that makes a big difference in commerce moving through the city and the city being able to operate. So it's a big deal from that standpoint. But 36% of their total operations is from highway de-icing. And this actually comes from the data that I got off of their 10Q that they filed with the Securities and Exchange Commission for sales of 9 months ended in September 30th, 2020. If you're looking at this, it says 2002. Nope, that's not right. The other significant part of their business is in sulfate of potash and specialty plant nutrients. Those in itself make up the two different things that are the most significant to their profits. Now, when we look at revenues of this company over the past year, I compare 2019, which was at $990.2 million, compared to 2020, which was down close to 4% at $952.4 million. So they had a little off year, but they have some good things going on at the company. One of the big things that I encourage you to use when you're looking at a company, especially a small company, is their financial ratios. The most fundamental financial ratio that you can look at is going to be the current ratio. And the way that we get that is we take the current assets of the company divided by the current liabilities. And there is a big difference of what's called current. I won't go into that because I don't want to get too geeky on you. But when we divide those numbers out, it's basically about 685 million divided by 301 million. That's the liabilities. And it comes out to tell me that their current ratio is 2.27. Now, generally speaking, a current ratio is good. Just to give you a framework to work from, is a good ratio is generally in between 1 and 2. If you get below 1, you're in danger zone. When you get over top of 2, you're getting the balance sheet has a little bit more substance to it. Now, here's a cautionary note on Compass Minerals. Their debt equity ratio is actually really, really high. It's at 4.15%. Now, how do I know that? I compared it to other non-metallic mining companies that are out there. There's actually a service online. You can look this up. The average debt equity ratio, and what they're doing in that particular ratio, again, not to get too geeky on you, but they're taking the debt of the company and they're dividing it by the shareholder equity, and they come out with a ratio. The average ratio for a non-metallic mining company is going to be about 0.61. And regretfully, Compass Minerals International has a 4.15. What's weighting it down? Well, this is it. They have long-term debt. Now, the long-term debt right now is at about $1.2 billion. If you're looking at the screen here, I got the decimal in the wrong place, but it should be $1,289.2 billion rather than the periods. I get in a hurry sometimes when I'm trying to prepare for you guys because I'm so excited to talk to you. Okay, but I want you to look at it from this standpoint. Yeah, that long-term debt could be less and it would be more healthy for the company, but they're working on it. They're working on reducing it. In 2019, for the full year, it was $1.3 billion. That'd be $1,363,900,000. And it went down to $1,289,200,000, which is a 5.58% reduction. And that's actually pretty good. Now, hey, you want to keep your eye on that, though, because if a company starts using borrowing and debt to pay dividends, that's not a good thing, because what they're doing is they're falsely supporting dividends for shareholders. Now, I don't think that's the case for Compass Minerals International, but if I was going to be investing $1 million, a lot of money into this company, I'd keep an eye on that over the long term to make sure that that long-term debt is continuing to go down and they keep that under control. Now, as far as dividends go, hey, this company is awesome when it comes to dividends. And you all know that here on the show, we actually love dividends.
The beauty of your side.
Yes, sir. As that musical interlude played, I wanted to introduce to you the fact that this company has a 4.51% dividend yield. Look, I got to warn you, though, the past performance is never, ever, 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 did I say ever? Never, ever going to be an indicator of what's going to be in the future. So 4.51 is good, and they've averaged out about 72 cents per share for quite a long time. And if you go back and you look at their dividends, they have increased them and they've continued to keep them going. And when a lot of companies out there during the COVID crisis have actually reduced or eliminated dividends, this company has continued to pay their dividends. Now, they're actually in a business which is isolated to some degree from the COVID-19 coronavirus pandemic, because if you think about the business that they're in, basically they're supplying salt. That's their main business. Remember, 36% of their business is going to de-icing. That's really not affected by the pandemic. Transportation is still going on, so they still need clear roads. The other portion is going to be what farmers decide to do and what they decide to plant. That's more weather related than anything else. Now, one thing that I will mention to you, I know I threw up on the screen here the graph that talks about the earnings, but I want to take just a quick moment and talk about what could affect this company on the long term. And we'll hit on this a little bit more in a moment. But climate change is a thing that can help, that can hurt this company. So, I think that they're pretty safe going forward. Talk more about details as we go along. But if you have climate change, you have less cold days. And if you have less cold days, you have less use for de-icing salt. If you have hotter weather, that could be a bad, or it depends on what it might be doing for crops. So it depends on how hot it gets from that standpoint. So, but in earnings, from the earnings standpoint, you'll notice if you're looking at the graph, and if you're just listening, let me describe this to you. What you're looking at is you're looking at quarterly earnings all the way back from 2014 on Compass Minerals International. And if you just joined us, hey, thanks a lot. Make sure you go over there and hit the like button and subscribe. Put some questions in. Let me hear from you. But as I'm looking at this, I want you to see that they're kind of up and down. It's stagnated, but it's pretty level. During the fourth quarter of every year, they're going to have a spike in earnings. And I think that's basically an accounting standpoint. But on an annual basis, their earnings are pretty consistent. If you think about the business that they're in, it's pretty consistent as well. But I have to remind you, there again, past performance can't guarantee what's going to happen in the future. And with that said, let's go into looking at what this company's value has done. Now, let me talk about this just for a real quick moment. And I want to make the screen just a little bit bigger for you so that I can talk to you for just a minute. And those that are listening, listen close. Okay. This company pays a 4.51% dividend. Their growth, and you're going to see that in just a moment, is moderate. It's not going to have Tesla type growth. But if you're looking for a company that has strong earnings, regular dividends, this may be one to consider. Why would you want that? Some of you may be thinking, I want a growth stock. I want a tech stock. I want one that's going to grow. Okay. I understand that. But with the new administration that's in Washington, taxes are probably going to go up more on the capital gains of investments. Now, let me say that again. With the administration change in Washington, there's a good possibility that the capital gains on investments is going to go up. Now, why does that make a difference? If you're growing by dividends, dividends are taxed as income. Now, I'll remind you, Neil, if you stick around to the very end, which you should, and read the disclosure, you've got to make decisions for yourself on how you're using this information. But I want to educate you and let you know that the income from the dividend is taxed as regular income, and that would calculate into whatever income taxes that you have. And if you're in another country, you got to find a tax advisor there and get them to help you from that standpoint. Okay, let's go back and look at the graph and talk a little bit about what's happened on the actual price. A year ago, around the 13th of 2020 in January, the price was at $55.97. Just a hair above, not much. And then wham, all of a sudden comes along the coronavirus market pandemic crash, as some of us call. It recovered. Compass did pretty well. Compass Minerals International did pretty good. And they recovered all the way up to where they closed at today, which was at 63.42. I know if you look at it on the screen, it says 63.61. That's what it was at lunchtime when I did this. But still, it's about a 13.5% gain in a period of 12 months. So that's not too bad in a period of a year for a value-oriented stock. Again, remember, the past performance can't guarantee what's going to happen in the future. And with that said, let me pause just for a minute and thank our next sponsor, which does guarantee the future. Our sponsor is adviceforlifeinsurance.com. This is a company where you can find the best life insurance at the best price in less than 5 minutes. That's adviceforlifeinsurance.com. Go over and look at them if you need life insurance, and they can help you out. Now, let's get into the bullish aspects of what some of the analysts are saying about Compass Minerals International. Some of them we've already talked about, but one of the biggest things that this company has going forward is the cost advantages. And it's also not just due to the fact that they've got a processing right there where the plant is, and they've got the place right on Lake Huron, but they've also got locations in the United Kingdom. They got locations in Utah and in Louisiana. So they're in a lot of different places. Now, another thing is that highway de-icing has actually been fairly stable. Well, now I can go back and look at the proof in this by pointing you to the earnings. Earnings have been fairly stable for this company. So the de-icing business it's a constant. Weather is pretty constant from that standpoint. Also, they have business diversification. Now, I know we've talked mainly about the sulfate of potash, which is used for plant nutrients, and we've talked about the de-icing, but there are other uses for salt. Now, another interesting thing is they actually are using the mines that they've used previously to do data and actually hard storage. In other words, they have cold storage available in England. If you wanted to store, I don't know, whatever you would want to store in a cold storage for a long period of time. So anyhow, those are the bullish aspects of what we would talk about when we're talking about this. And as I talk about this to everybody every day, there's going to be some negative aspects to any stock. No stock is 100% positive. Now, from a bearish standpoint, and you could say, yes, from a negative standpoint, climate change may decrease the need for de-icing salt. If weather is warmer, then you're going to need less salt. Now, we don't think about that right now. We're in the midst of weather, and if you're in the north, you've got snow and ice, and you're thanking God that there's a salt truck out there that's clearing the roads for you. The other thing is the plant nutrition cost that's for the sulfate of potash is actually projected to go down. And some analysts are pointing to that, thinking that on the long term, that could affect the profitability of the company. So you have to make that decision for yourself. The other thing is that there is other competition from China and Chile for the plant nutrition. And if they lower their prices, because basically they do for whatever reason, then it's going to hurt the margins in general. Okay, let's look at what the valuation is, because we can look at this and think, okay, they pay good dividends, but when is a good time to buy this stock? What is the value of it? What's the true value of it? And a company that I really like to depend upon, that I lean upon for information, that's because they have such a good depth of knowledge and analyst, is Morningstar. Now, Morningstar rates this as a 4-star company. And remember, the 4 stars, it's different. If you have a mutual fund at work and they say, hey, I've got a 4 or 5-star mutual fund, the system of rating is different for mutual funds and ETFs than it is for stocks. Stocks, I'm going to shortcut it and say it's primarily based on what the valuation of the stock is. And when a stock is under what they feel is going to be its true market value, then it's going to have more stars. In this case, it's a 4-star stock. Morningstar is saying that the value of this company right now for Compass Minerals International is $80. And the current value is $63.42. Yeah, I know the screen says $63.61, but at the market close today, it was at $63.42. Nonetheless, friends, that's still about a 20% discount over top of what Morningstar thinks its fair market value is, which that's pretty good. Now, let's look and see what some of the other analysts out there are saying about this stock. Now, this is interesting, though, because when we look at stocks, a lot of times there's not a lot of analysts out there that are following small cap stocks. But for a company that's worth $2 billion, Compass Minerals International actually has 7 analysts that are following it. So it's a significant company. They're a big weight when it comes to the salt business. Now, 2 of the 7 are saying that it's a strong buy. One of them is saying that it's a moderate buy, and 4 of them are actually saying that it's a hold. So let's take a look a little bit closer at that. Now, when we talk about the competitiveness, I'm going to look at the individual analysts here in just a second. But before I do that, I want to talk about the competitiveness. Remember the SEC, the stability, the earnings, and the competitiveness. The competitiveness is what other companies out there are competing to take business away from Compass Minerals International. And what I've thrown up on the screen right now is a spaghetti graph, and I'll describe that to you. There's a blue line which goes over a period of a year, and it just about beats every other company out there except for one. And that's a company, it's actually a larger company called the Mosaic. And the Mosaic has a business that is similar to, but not exactly, similar to Compass Minerals International. And I want to point out one other fact with the Mosaic is it's a lot bigger company. It's at $10.15 billion. It's also got a lot less dividend that it pays out. So if you're looking at this company from a dividend standpoint, they don't compare. If you're looking at it from a profit standpoint, you'll actually see from looking at the spaghetti graph in the last couple of days, actually, we've seen the Mosaic move ahead. Until that point in time, Compass Minerals International was actually on top of everything. But we're looking at some other companies too. Nutrien is another company. It's worth $37.33 billion. It's comparable to Compass Minerals. It's much larger, but they are paying a dividend of about 3.69%. Then K&S, which is a German company, it's closer to the size of Compass Minerals. It's paying about $1.87 billion, but its dividend is nowhere close. It's at 0.41%. But look, friends, I still have to remind you that the past performance, especially on the dividend side, is not going to guarantee what the future is going to be. Now, the last slide of the day that I threw up here for you is what the different brokerage houses are saying about this. Now, this gives you a range. I know that we talked about the fact that Morningstar said that the fair price was $80. It's currently trading at $63.42. If we look at what some of the other analysts are saying, BMO Capital Markets probably is the most conservative, some might say pessimistic. They're putting a price range in between this of $50 and $55. They're saying that it's market perform. They're probably one of the ones that would have the hold placed on it. Now, we look at the most optimistic analyst, and that would be Stevens, and they're putting a price on this at $73 to $70. And right now trading at $63.42, it's under that. So it looks like that there's some room to grow. It looks like Stevens has more of an opinion that goes in line with what Morningstar is. Now, remember, with Morningstar, there's two ways that they rate companies as far as valuation goes. If you ever see a Morningstar fair market valuation where you see their star rating for a stock and it has a Q beside it, that means because there's an algorithm that figured that out. If it doesn't have a Q, they had a live person that actually went through on a meticulous basis and analyzed this company. And that's what they did for Compass Minerals International. Now, just remember that that's what we're looking at, what we're trying to do on a company is we're trying to say, how is it from a stability standpoint? Let me ask you, I've talked a lot today. How stable do you think this company is? We looked at the earnings. We looked at the valuation that's gone over a period of a year. So you ask yourself that question, how stable are they? And how are the earnings? Now, I didn't go back very far on dividends, but I can tell you they've paid pretty consistent dividends for years. But again, past performance, no guarantee future results. And competitiveness, the only company that came close to it was the Mosaic, but other than that, they performed very, very well from the standpoint of their competitors. So, friends, with that ends us up at looking at Compass Minerals International. Thanks a lot for visiting with me today. And if this is your first time, put a stock into the comments that you'd like to hear more information about. I'm always looking for more information. I find some of the best stocks out there from you all, the viewers. I think I have some of the smartest viewers and smartest listeners that exist. And I appreciate every last single one of you. So with that said, let's get going into the rest of the week, and we'll talk to you tomorrow. Have a good evening and stay around for the disclosure that's real quick.